Now under 6 minutes until the closing bell on Wall Street. So the market today still reacting to yesterday's decision or lack thereof from the Federal Reserve on interest rates. No cut yet, which nobody expected yet, leaving rates at a 23-year high and anticipating, investors are, the jobs report, which is out tomorrow, first Friday of the month. Mark Zandi joins us. Mark is the chief economist for Moody's Analytics. Thank you so much for coming on. I think if we're going to have a big picture discussion about the economy, we probably have to just start with inflation and go from there. So I just want to play a little of Jay Powell, the Fed chairman, in his remarks after yesterday's decision. Here's how he put it.
Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain.
All right, uncertain path, it's still too high. What would you say about inflation for the rest of the year?
I think it's headed lower. I forecast many things. Some I'm confident in, some not so much. This one I'm confident in. I do think inflation will continue to moderate. It's not a straight line, economic data zigs and zags month to month, but I think all the trend lines here look pretty good. I mean, the only difference between where inflation is today and the Fed's target, the 2% target, is the growth in the cost of housing services. And that's tied back to rents. And we can observe market rents. They're flattened down over the past year. They're going to be flattened down in the coming year because there's a lot of supply in the multifamily market going to completion. Vacancy rates are rising. So that would argue for slowing in the growth in the cost of housing services. And that would argue for inflation getting back to the Fed's target over the course of the next 6, 9, 12 months. So I feel pretty good about that.
Yeah, there's actually some debate about that. So I'm interested to hear you explain that further in terms of the Fed has, as you say, a target. They want 2% inflation. I was reading in the Wall Street Journal, we'll put the article up from Greg Ip, I think, wrote it. He's a very, very smart guy. Stalled inflation vexes the Fed. Is it noise or is it a new trend? Talking about how the fundamentals suggest inflation could still be headed down, but the Fed isn't betting on that. And that idea of a new trend that, well, maybe 2%, that was what everyone always said, but maybe there's a new trend that's a little higher than that. You don't think so?
I think the Fed will get what they want. I think they'll get it down to 2. That brings up a good question, though. I mean, is 2 the right number? I mean, I think that was said a long time ago when the economy's growth rates were a lot higher. If you ask any Fed official today, I would venture to guess they'd say, if de novo, if you had to pick that target, what would it be? I would venture to guess nobody would say 2. They'd probably say 2.5, 3, something like that.
Is that what you think it is? Like you think 3% inflation, the economy's okay?
Yeah, I mean, because, given the slower growth rates of the economy, if you get into a recession, even a typical recession, and you look at historically how much the Fed has had to cut interest rates, every single recession we get into with this 2% target, we're going to hit the zero lower bound, meaning we're going to get the federal funds rate target at 0. The Fed's going to have to keep buying bonds. Nobody wants that. It's not what they want to do. So, yeah, I think they should set a higher target. But they can't do that now. I mean, it's a matter of credibility. They said they're going to get 2. They're going to get 2.
And you think they can get it? Some other stuff, but you think they can get back to 2, maybe a year? Is that or so? That's about something like within a year.
Yeah, I mean, I think, we're within spitting distance already. I mean, I think sequentially, month to month, quarter to quarter, if you told me, over this summer, fall, we're at target, I say sounds about right. On a so-called year-over-year basis, I know this gets a little technical, but that will take a year to get back to target.
Okay. I want to ask you kind of a question. We've done segments all the time about numbers like you and I were just talking about and how people don't feel the same as the numbers show, right? Like, and you know this. I think inflation's different than other economic indicators in that way. In other words, if we're going through something like where the stock market's down or there's something else going on in the economy, something about inflation, maybe it's because we haven't felt it in so long, that really hits people, right? They're paying more at the grocery store. And even if it's coming down a little, it's really disinflation. It's not deflation, so they're still paying more than they were, and we get these different sentiments from people. Will that change before the election? I mean, if we have it, we'll put up these swing state polls. Everybody says the economy's number 1, and inflation's number 2. It's like 80% on each. 80% in the economy, 70-something% in inflation in the big states: Wisconsin, Michigan, Pennsylvania. So there it is. What's going to happen before the election? Is this perception issue going to change, or is it really a negative for the sitting president, do you think?
Yeah, you got it totally right. I think everybody's got something they buy regularly that they're paying a lot more for today than 3 years ago, and it really bugs them. Ramen noodles, kombucha tea, pound of sugar, baby formula. And even though inflation, the rate of growth has slowed, people still feel this thing. And you're right. I'm old enough. I grew up in the 70s and 80s. I know how it feels. You're too young. This is probably the first time you felt inflation.
Well, sort of as a working person, at least, right? You know what I mean? Like, and I think there's a lot of people like that. Because I'm not that young. I mean, I'm 46. So, like, there's people that have been working, and this is the first time they've kind of gone through something like this, that have kids, and I think that matters to people. So, I mean,
the other thing is,
go ahead.
They think they're getting ripped off, right?
Right.
I mean, it's not fair. I mean, how could it be that I'm paying so much more for this thing 3 years, today than 3 years ago, 3 years ago? Someone is ripping me off, right? And so that's why greed inflation kind of resonates with people when people talk about greed.
Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.